Picture this. You have got $1 million to invest. 10 years ago, you would have thrown it at the craziest, loudest, hyper-growth startup you could find. You wanted the next Uber or the next Airbnb. You did not care if they were losing money as long as they were growing fast. But in 2026, if you do that, you are basically setting your money on fire. The world has changed. The move fast and break things vibe is officially dead and buried. Right now, the smartest billionaires on earth are running away from hypergrowth and hiding in companies that are boring, safe, and profitable. We are talking about a total flip in how money works. While everyone else is chasing the next big trend, the real winners are the ones who are playing it safe. If you keep chasing growth at all costs, you are going to wake up one day and realize you have lost everything. This is the death of hypergrowth. And the new secret to getting rich is something nobody saw coming. We are breaking down why being safe is now the most profitable move you can make in this chaotic new economy. Hello friends, welcome to Geo Unseen YouTube channel. Today we break down why being safe is now more profitable than hypergrowth. For the last decade, we lived in a world of cheap money. Interest rates were basically zero, so investors did not care if a company made a profit. They just wanted to see the user count go up. They wanted to see the map getting bigger. But in early 2026, the party is over. Interest rates have stayed high, and the cost of borrowing is killing the old hypergrowth model. Companies that used to burn millions of dollars a month just to grow are now collapsing like a house of cards. Investors have shifted their focus from how fast can you grow to how much cash do you actually have in the bank. This is a massive wake-up call for the entire business world. We are seeing a move toward what people call mindful scaling. Instead of trying to take over the world in a year, smart companies are focusing on their core business. They are cutting the fluff, tightening their teams, and making sure every dollar they spend brings back more than $1 in profit. This sounds like common sense, but for a long time, it was ignored. In 2026, being boring is the new sexy. Companies that provide basic needs like energy, food, and security are seeing their stock prices skyrocket while the flashy tech startups are struggling to stay alive. The map of success is being redrawn, and it favors the steady and the stable. Even the big tech giants are changing their tune. We are seeing massive layoffs and efficiency years becoming the standard. They are using AI not just to create new things, but to slash their costs and make their existing operations way more profitable. They realize that you do not need 10,000 employees to run a successful app if you have the right tech. This shift is creating a huge gap between the companies that adapt and the ones that are still stuck in the 2010s mindset. In this new era, the turtle is officially beating the hare. Quick question for you guys. Do you think it is better to invest in a company that is growing 100% a year but losing money? Or a company that is growing 5% but making a massive profit? Let me know what you think in the comments, because this choice is going to define the winners of 2026. Now let us look at the cold hard numbers that are shaking the world in early 2026. In just the first 40 days of this year, the US tech industry alone has eliminated over 80,000 jobs. We are talking about massive companies like Salesforce, Block, and even Oracle cutting thousands of roles. But here is the crazy part. They are not doing this because they are failing. They are doing this because they are becoming more profitable. This is what experts call agentic displacement. These companies are swapping human employees for AI agents that can do the same work for a fraction of the cost. Salesforce is pivoting to their agent force automation, and Oracle is cutting up to 30,000 jobs just to fund their AI data center expansion. This is the new reality. Being safe in 2026 means being lean and using tech to squeeze every cent of profit out of your business. The old map of growth at all costs has been replaced by a map of efficiency at all costs. In 2025, we saw a massive tariff shock that pushed up prices by over 5%. And that burden is still hitting the market in early 2026. This has made borrowing money way more expensive. If you are a startup trying to grow fast, you are basically walking through mud. But if you are a boring, safe company that has its own cash flow, you are the king of the hill. Investors are no longer looking for the next moonshot. They are looking for monopoly businesses, the ones that provide essential services like banking, healthcare, and telecom. These sectors are performing fantastically because no matter how much the world changes, people still need to call their families and go to the doctor. Even the stock market is showing us that the worst is over for those who play it safe. While the hyper-growth stocks are struggling, the boring mid-cap and small-cap sectors are starting to see a ray of hope. Why? Because they are finally being valued for what they actually make, not what they promised to make in 10 years. We are seeing a disciplined march to value. If a company can show that it is using AI to automate its finance and HR and IT departments, its stock price goes up. But if a company is still just crowdsourcing AI without a plan, it gets punished. In 2026, the real power belongs to the leaders who can project stability in a world that feels volatile and uncertain. Quick question for the crew. If you saw a massive company cutting 10% of its staff to become more profitable, would you want to buy their stock, or would you be too worried about the people losing their jobs? Drop your answer below, because this is the exact debate happening on Wall Street right now. The secret is that the AI-first business is the new normal. By 2026, successful companies are using AI from end to end. It is not just about chatbots anymore. It is about autonomous agents that can forecast demand, optimize supply chains, and manage risk with zero human intervention. This is why being safe is so profitable. You can run a massive global operation with a tiny team and almost zero overhead. The companies that tried to stay big and bulky are being left behind. The future belongs to the lean and mean players who prioritize their profit margins over their ego. We are also seeing a massive shift in how people invest their own money. In 2026, more people are moving into monopoly businesses like stock exchanges and core infrastructure. These are businesses that have zero competition and consistent results. While the flashy crypto and tech trends go up and down like a roller coaster, these boring businesses just keep printing money. It is a contrarian playbook that is making a lot of people very rich while everyone else is still waiting for the next growth cycle to start. The rule for 2026 is simple. Stop looking for the next big thing and start looking for the thing that already works. As we move deeper into February 2026, the data is becoming crystal clear. The growth at all costs era was like a giant firework. It was loud and bright, but it burned out fast. Now, we are in the era of the compounder. These are the companies that focus on a 15% profit margin year after year without failing. In a world where the US interest rates are still stuck at 4.5% or higher, cash is no longer trash. Cash is the ultimate king. If a company doesn't need to borrow money to survive, they have a massive advantage over everyone else. This is why being safe is the only way to win in 2026. Look at the global giants right now. They aren't launching crazy experimental projects anymore. They are buying back their own shares and paying out massive dividends to their investors. They are telling the world that they have solved the puzzle of profitability. By early 2026, the stock market is rewarding quality over everything else. Quality means a strong balance sheet, a dominant market position, and a management team that knows how to say no to bad ideas. The secret map of wealth has shifted from the Silicon Valley garages to the boardrooms of companies that actually produce real-world value. But here is the final lesson for you. This shift isn't just for big corporations. It is for your personal life too. In 2026, the people who are winning are the ones who are building boring income streams. They are investing in reliable assets, building lean side hustles with AI, and keeping their expenses low. They realized that hypergrowth in your personal life usually leads to burnout and debt. But safe, consistent progress leads to freedom. The world is getting more chaotic every day, and in a storm, the most profitable thing you can be is the anchor. We are witnessing a total reset of the human mindset. We are moving away from the get-rich-quick schemes and moving back to the fundamentals. Hard work, high margins, and smart tech. If you want to stay ahead of these massive economic shifts and learn how to position yourself for the 2026 reset, make sure you hit that like button. It tells the algorithm that you value real, grounded insights over the hype. We are here to help you navigate this new world where the rules have changed and the old playbooks are useless. For more deep dives into the future of money and power, subscribe Geo Unseen YouTube channel. We have a lot more stories to share and a lot more secrets to uncover. Thanks for watching and for being part of the Geo Unseen family. Stay grounded, stay profitable, and we will catch you in the next one. Peace from Geo Unseen.